Make a quick video about Intuit. It fell below the resistance that's been it has resistance from 2022. It fell below that. And if you were a buyer here, I want to congratulate you because it's pushing above the past resistance that became like support that became resistance. And now it's basically recovering. So what I want to see next for Intuit is that it actually recovers back to its median valuation. This chart is based on percentages. So the last time it fell this much was back in 2009, 2008. So you really have a good opportunity if you believe in USA's economy, buy Intuit. And if you believe in Intuit, but for me, Intuit is the bet on America's economy doing well over the long run. And Amazon would be a good bet if you believe the American consumer will do good in the long run. So if you believe both of them, you, I would say you could buy both of them. This is not final financial advice, but it's what I'm doing. I'm heavily into Amazon, and it's like all of my money goes into Amazon, or at the moment, like collecting, hobby collecting, and stuff like that as well. But Amazon is my only position in my bank now. I sold out of Microsoft, and it's all Amazon, all Amazon. So, anyways, Intuit, you have it's a very recognizable financial firm. You have QuickBooks and TurboTax, Credit Karma, and now you also have uh, Mailchimp, which is like an AI advertisement system. Uh, Even though you have all of these consistent growth, and it's expected to continue growing consistently, like 15% revenue growth. This is amazing for a company this size. Like you're jumping from 18 point almost 19 billion to almost 21 billion in revenue. Like it's is very good figures. Like the numbers are great, and you look at the EPS growth, it means like they're doing something very well because they're executing very well. The net income is growing. Like it's just like everything about Intuit looks beautiful from a investor perspective. There is nothing really to complain about when it comes to internet. Uh, you have like they're buying back some shares. They have they had a few years where they diluted shareholders, but they're buying back shares now. Dividend is growing by 15%. So if you're looking for a long-term dividend play, Intuit is also a good place to be. Like I said, they're trading at a very cheap average. You call it average, maybe? Yeah, average. They're trading at the same discount as that you got like in 2028. 2008. Yeah. 2028. 2028, did I say that? Okay. 2008. Oh my god. My brain is going like I'm excited because this is like a good opportunity for me. Uh Basically you have a company that's consistently growing. The only thing that's like made it drop off is like, oh, the government is going to replace them because the government like their business so much. Oh, okay, sorry, tell me that again. Like, so they're making a competitor to them because they want to take their customers because they're doing such a good job that they're making a lot of money. That sounds very bad. They're making a lot of money. That's very bad. I don't want to be invested in this. Yeah, sure, they might lose 1-2% of their customer base. Uh, but the thing is, they have something that whatever competitor that comes into this space and try to take from them, like take customers from them, I don't believe they will take a lot of their customer because they already have the data. They have like the past 10, 20 years of some of their customers. Why would they want to leave into it that has all their information to move to a new platform there where they have to send in all of this old information? Like everything is just a big hassle for the customer if they want to switch. So they have this big moat of like switching is very annoying, especially for a big company or like a big customer with a lot of money. Like if I were very wealthy and I had Intuit as like using Intuit, I wouldn't want to like risk switching because of yeah, it's just uncomfortable. You know, like you have to take all your private information and submit it to a new product that is not very well proven compared to this well proven product that Intuit is providing. Like no, I would stick to Intuit. So all of this fear at the moment, I feel people are just making up a lot of the fears in the market and selling into it. Of course, financially, they're not affected at all. Like they're increasing their revenue growth the past years. Okay, 2022 they had excellent growth, but still they're ramping up. And what if they grow 20% 4 years from now? Well, it's very big now, so it's maybe it won't happen again. That's but we say that about companies like Amazon, Microsoft, Google had the same argument like, oh, they're gonna stop growing. But the thing is, if you buy them cheap enough and the economy is doing well, and then all of a sudden the economy helps the company to grow faster, and maybe they make some good decision along the way. If you get it cheap enough and you have a high quality business, they just have to execute. And that's the only thing that's either they're not going to execute and they're going to trade in this window here. And even if they trade in this window here, 10 years from now, you're likely going to make a decent return, like 10%, 5 to 10% a year at least. But if they execute, you're going to make explosive returns. And we can see this if we go into the forecasts. The forecasts are very like, you can't really rely on them, but you see, you could expect high execution 900. I would not put it 900, I would put it 600, but I like all of this I would say is tied to how they execute. The next 3 years, how will the next 3 years look? Depending on how the next 3 years will look, this is where you will end up price wise. But like I said, I want to buy this and I want to hold it for the next 10, 20 years. I don't want to just hold it for 3 years. So I'm looking at this as a company that has all the consumer data. They have the ecosystem, and on top of that, they have the switching cost, and then they have the distribution. So this is a business that has years of financial data, payroll, payments, invoices, accounting, workflows, QuickBook, and customers has plenty of reasons to stay with this company. So I don't think anyone will like some will switch, but it's a hard sale. Can you stop using Intuit and go to our small business? We have 20 customers. You want to switch? No. And then you have the AI question like, oh, AI is going to make this for you. Why would I pay Intuit $50 per month when AI can do my bookkeeping, accounting, and taxes? Well, maybe because I want to make sure that it's correct, and maybe that I don't want to give my information to a system that is not like filtered through a human being. Um, like I think Intuit is going to do the AI road as well, but they will also have they will have a person that actually check everything. They don't want to have a system that is fully dependent on AI. I think because it will lead to a lot of issues when it comes to filing your taxes, like having all your customers uh, basically be unhappy or not satisfied because of what your AI system has done for you, for them. So I don't think AI is going to be a big threat to this business. I don't. I think a lot of people want a reliable human to do their taxes, not a 100% system. Like they want maybe 90% a system and then 10% to be done by a human that checks that all the taxes and everything is correct. So long term, yeah, maybe AI will take a bit of their business, but not a big chunk. Yeah, so I don't believe the AI disruption. I don't believe the customers will leave. And Credit Karma is a bit sensitive to cycles, but it's just a small part of their company overall right now. Uh, QuickBook, I like how they done it on stock analysis. They break it down very nicely, and you can see how the capex and cash flow is linked, and you can see how rapidly it's growing. So 25% a year. It's like, yeah, you can see the operation, how it works. Margins stable around 80%. There is nothing that's like mind blowing, and there is nothing that's like, oh, this is going to collapse and go to zero. It's just a stable business, and you look at the valuation. You're just getting like all the valuation metrics. If you, oh, okay, I don't. Sorry, I'm not paying for it. I'm cheap. That's how you make money, not paying for stuff. Oh, you can put it into bars. Oh, that's really nice. So you can really see like, uh, so they were valued at 50, 60, 57p. Oh, that's a bit too high though. But now you're getting it at like 22p, forward p is 13. Like price for cash flow is 12. Price to sales is 4.7. Like it's a reasonable business for a reasonable price, and I believe you're gonna do very well for like if you're an investor, not like someone that wants to just jump in and then, oh, it goes down 10%. I'm gonna sell. I'm gonna sell. I'm gonna sell. Or this for me is a lot like, yeah, what's it called? Oh, my brain is freezing up. Not UPS, the other one. Oh, I'll check. Oh, FedEx. Yeah, FedEx. Do you ever get those like brain freezes when you look at stuff? I said like this is a really decent buy at two. I think what 220, and it's this is a company that has like no growth. Like it's well, it has some growth, but 7% into eternity, and you look what you're paying for it. You're basically paying a bit cheaper than Intuit, but you're getting so much more for Intuit. So if you bought this back when I told you, well, not financial advice, back when I told you like FedEx is looking like a decent opportunity to like invest long term. If you actually zoom out to 20, uh, So around here, yeah, here. When I told you this is a good buying opportunity, and then it shot up, and now it's trading at this average range again. And now you can just sit, hold this. It might go down, it might go up, down, up, down, up, down, up, down, into infinity, you know, or until you sell, basically. Now it's a decent time to sell if you don't want to hold it anymore. But for me, Intuit is the FedEx of today. If I look at what my past recommendations are, like this is like, FedEx was also a simple business to understand and simple business to just buy and hold. And I like the things where you can buy, set it and forget it, and then come back like half a year later, and now you're basically made 45% in half a year. Yeah. So, yeah, that's what I want to say. Like, don't take this as financial advice. Look into the business, see if you like it. For me, it's very obvious why I would want to buy into it. Is if I believe the economy for you, the US economy is going to keep on booming into it, is going to do very well in the long run because people will pay more taxes. Me personally, I already have all my money in Amazon and I don't want to sell. So, but this would be my like, oh, this is my obvious buy today. Like, uh, oh, it's FedEx. I was like, what? This doesn't look right. Yeah, that looks better. I was like, where's the revenue growth? But like everything is looking decent for a cheap company and nothing is screaming you should sell it today. But everyone is selling it today. Everyone is just panicked. So yeah, and like I said, I'm in Amazon. I like Amazon, but it's because I'm gonna hold Amazon for 20 plus years. This is my retirement, you know? This is the ship I'm gonna either sail onto into the sunset or I'm gonna crash and burn. Basically. No, but I think Amazon will be a much larger company in the future. And the thing with the stock market, you buy into things you believe in into the long term. The truth about the stock market is you don't know what will happen tomorrow. Amazon can crash down to 165. And you know what I would do if it crashed to 165? I would buy more. It's shocking, you know, it's shocking. But I believe this is a company that I believe will run and run and run. And it won't like the firepower will not just die. And I believe the same with Intuit. I believe the same with Microsoft. There are certain companies that I believe will not die, no matter the bad press, no matter like short term economic events. I believe they will survive the next 20 years. And if they go cheap, that's just a good time for us investors. We should share when we lose 50% of our money because that means that we lost money fast, but we're going to make money slowly into the future. And I think a lot of people misinterpret a downtrend. They see it like, oh shit, I'm losing a lot of money quickly. So I better sell. No, you should either research why it's falling. Will this be a permanent thing? Is this a company you can hold for 20 years and trust the management to do right to the investors? Or is this a company that will like use the investors because the business is a failing experiment? I don't want to be in an experiment. I want to be in a business that will grow over the next 20 years. Yeah, that's enough about my rant. Yeah, it's supposed to be a short video about the internet. So hope you got something from it anyways. Not financial advice, just buy what you like, hold it forever. That's kind of buy an ETF. That's kind of what you should do. Shouldn't follow influencers on YouTube into random stock picks. No TTCF, no, what was it, Smile Direct Club, no Fubo TV. Avoid these kind of things that are going to basically depend on one thing going right for it to be a successful investment. Avoid those. Stick to the thing that will do good in 20 years. And you can just keep on buying it, keep on buying it, keep on buying it. And you will have no regrets 20 years later. But the people who bought Fubo, and I told you, it's a garbage company, it's going to zero. You're now sitting on a 98% loss from when I made that video. And you're going to regret that your entire life. You could have sold, broken even, could have put it in an ETF, but you're now stuck with a company that's slowly dying. And you don't know what to do. You're going to sell or you're going to wait for Disney to save them and buy them up. Well, that's up to you. I don't know what to do. I should have sold earlier. That's the market.